And what I mean is that private capital cares about one thing and one thing only, right? Which is valuation. Valuations, at least in the recent past, have been as frothy as they can pre-IPO. So private equity players have essentially made their money. But when these IPOs have hit the market, there's the strong narrative that the VCs have put out has actually flowed along to the public markets. And I want to say the retail investors have maybe been brainwashed by it, and they end up investing only to realize that value is inflated and maybe absent even. So, what do you think about that take?
Well, I would say an investor who ends up with a poor outcome has only himself or herself to blame. No one put a gun to their head and asked them to buy X or buy Y or buy Z. It is in the nature of investing that we have a lot of snake oil salesmen who will bring things to public markets and package them in manners that look really exciting. And we've seen this story for 100 years. And our job as investors is to sift through all that. So one of the simple rules an investor can use is not to invest in IPOs and not to invest in any businesses that have less than 5 or 10 years of history as a public company. So if you just put that filter in, you've wiped out the salesman. And the salesman's pitches don't mean much. So I do not believe venture capital is evil. And I do not believe that it's a zero-sum game or that they are taking money from somebody else. I think the venture capitalists provide a real service to society. I also think that venture capital is a really, really difficult business to do well in. If you look at the historic returns in Silicon Valley or venture firms, there is a massive delta between the top quartile firms and the bottom quartile firms. Basically, if you are not in the top quartile firms in Silicon Valley, you will have terrible results because in venture capital, deal flow matters. And the deal flow is going to end up with the people who have the brands. So I have a number of venture capitalists who are investors in my fund. And for example, one of them was telling me that if they had access to the trash can of Sequoia Fund, their results would be spectacular. So they said, if we could just take a look at everything Sequoia turns down, we would do so well, right? So not the deals that Sequoia invests in, the ones that Sequoia rejects, because his firm doesn't have the brand name. So those deals never show up on his doorstep. The deals that show up on his doorstep are so useless compared to the deals that show up at Sequoia. So if you are Sequoia or Andreessen-Horowitz or Y-Combinator and so on, you have a very good chance of doing really well because you're going to say no to a lot of great things, but you're probably going to say yes to some truly exceptional things that most other people never get to look at. So I actually think venture capitalists as a group do a huge service to society. They are providing high-risk capital to entrepreneurs who would not have a way to really scale. And of course, it is the job of venture capitalists and bankers and private equity players to dress up the pig as best as they can and bring it to the public markets at some point so they can get an exit. We know that, and it's our job to be very unskeptical. So to the extent that we can do our job, we'll be fine, and they should be allowed to do their job. That'll be fine too.